Hello, everyone, and thank you so much for joining us for the webinar. My name is Arslan Mushtaq. I'm the Managing Director at ATH Gadlang. We are a boutique consultancy firm who are specialized in providing various tax services in the GCC region. We are also a tax agency registered with the FTA. I'm going to be the moderator for today's webinar, and I'm also joined by my colleagues, Rashid and Asif, who will introduce themselves in due course. Today, our plan is to recap some of the recent changes announced by the FTA. Just for some housekeeping rules, can you please keep yourselves on mute, and there will be plenty of opportunity for you to ask questions. So you can post them in the chat bar or in the Q&A section. So without further ado, I'll pass on the mic to Asif for run us through the next slides. So over to you, Asif. Do you want me to change the slides?
Hi, Aslan. Hi, everyone. This is Asif. I'm the tax manager in ATH Gadlang, and I'll be taking you through the slides today. So, yes, Aslan, can we go ahead?
Yeah.
Okay. There have been few key updates in the tax laws currently. So, one of the major changes that we have seen is the Federal Decree Law number 28, which has come in to amend the provisions of Federal Decree Law number 7, effective from November 2021. And in the major changes which we have come across here, as the timelines has been extended for many persons to dispute decisions issued by the FTA, as well as the timelines for the FTA to issue its decisions regarding the disputed cases. Other than that, there's the reconsideration request, tax disputes, issued committee, and competent courts. There have been changes in all of these articles pertaining to each one. And then coming to the Cabinet Decision number 88, which has been amended by Article 51 of Cabinet Decision number 2. And we'll discuss on this on the following slides. Okay, the FTA has come up with a new clarification in relation to goods supplied in a designated zone, which are mainly concerned with connected shipping or delivery services, which you can see as goods that are supplied within the zone and the goods are intended to be consumed, and such goods shall generally be regarded as being supplied in the UAE. Now, the term consumed has been interpreted broadly, which also includes utilization, application, employment, exploitation of the goods. So, and the resale of this purchased goods is not treated as consumption of the goods. So, coming to the table below, we can see that for production of another goods, there are exception rules that apply. That is, if the goods are not incorporated into, attached to, or become part of, or used in the production of another goods, these goods must be in the same designated zone, and they must not be consumed. Then the next point that would be is goods delivered outside UAE. The goods that are delivered outside to a place outside UAE, and the supplier retains the customs evidence, proving that the goods were moved from the designated zone. They should also have supporting commercial or official evidence, proving that the delivery of goods to a place outside the UAE. So these are the two documents that now the customs we have to keep maintained in our records in order to ensure that the goods are delivered outside UAE. For goods delivered inside UAE, there are a few conditions that must be met. That is, the goods are moved from the designated zone to be delivered in the UAE, and the supplier retains official evidence proving that the goods were imported, as well as evidence that the VAT has been paid and those import. So these 2 points are very critical that we need to maintain now in our records, which shows that there's official evidence retained for the goods that were imported. and also ensuring that the VAT has been paid on those imports. Then in addition to this, going to next slide, which is in relation to shipping and delivery services. So under the general rule, the place of supply of any services supplied in a designated zone is considered out of scope. As an exception to this rule, shipping and delivery services supplied directly in connection with goods will be outside the scope of VAT if the following requirements are met. First of all, the shipping and delivery services is supplied by the same supplier of the goods. So they can't be a third party, it can't be an agent, it has to be the one supplying the goods. And the supplier of such goods is a non-resident and not registered for VAT in the UAE. And then the goods are sold via electronic sale platform. Then coming to that, the supplier of the goods is not the person owning the electronic sales platform. So you have to be a non-resident, which is one of the mandatory points for this. Other than that, you don't need to be registered, and the sales platform that is selling the goods should not be your own. In that case, you would not be required to register for UAE VAT. Okay, understand. Can we go to next slide? Okay, now coming to the amendments to tax procedure law. The tax procedure law has been amended, as we know, by the introduction of Federal Decree Law number 28. And we have noted various changes in this, as I mentioned earlier, mainly due to extension of timeframes for the submission of reconsideration application to the FTA, objection before Tax Dispute Resolution Committee, and appeal before the competent court. In addition to these changes, we have also seen few other amendments, which include elimination of the requirement to settle administrative penalties prior to the submission of objections before the TDRC, that is a Tax Dispute Resolution Committee, and payments of administrative penalties in installments, which are not included in the earlier provisions. We'll speak on these changes and how it affects businesses in this few slides. To start with, Article 27 of the decree law, whereby any person is allowed to submit a request to the FTA to reconsider any decisions issued to him within 40 business days from the date he was notified of the decision. Now here we see earlier in the provision it was only 20 days, but the FTA has extended this timeline to 40 days now in place of 20 days. Similarly, the response time from FTA to issue a decision on the reconsideration request have been extended from 20 days to 40 business days. Again, we see a 20 business days increase from the earlier provision. And once a decision has been reached by the FTA will inform the applicant within 5 business days from the date of the issuance of the decision. Then coming to Article 30, which has also been amended, in case a person would want to object to a decision issued by the FTA on the reconsideration request, the person can submit an objection to the reconsideration decision to the Tax Dispute Resolution Committee, in short TDRC, within 40 business days from being notified of the reconsideration decision, which again, as per the earlier provisions, was only 20 days. Furthermore, we have seen a very important change that has been introduced through this article, whereby the requirements to settle the administrative penalties before submitting an objection before the TDRC has been eliminated. As a result, businesses are only required to pay the disputed tax amount as compared to the earlier provisions, where both tax and administrative penalties were required to be paid. From this, we can see that taxpayers have been given more flexibility in terms of settlement of taxes and penalties, whereby they will be only required to make the payments of taxes to be eligible for filing objections with the TDRC. In case the final decision by the TDRC regarding disputed amounts exceeds AED 100,000, a person can appeal to the competent court within 40 business days, which as per earlier provision was 20 business days. So based on this few articles, we can understand that taxpayers now have more additional 20 business days to dispute decisions issued by the FTA, which will help them to reduce the risk of missing the chance of disputing the penalties. Then coming to the next slide, the amendments of requirements to submit objections and appeals. These are mainly amendments which have been done in Article 30 and 33 of the tax procedure law. So the first one, we have already discussed this, that is a requirement to settle of taxes and penalties prior to filing an objection to the FTA decision, which has been amended to include the settlement of taxes only and not the penalties anymore. In addition to this, in Article 33, a new clause was introduced by the FTA, by the tax decree law, and that is mentioning specific instances where an appeal can be considered inadmissible, such as failure to file objections before a TDRC within the prescribed time, failure to provide proof of payment of tax, and required amount of penalties. So this is a new clause that has been inserted, which provides instances that by which the appeal can be inadmissible to the TDRC, to the Supreme Courts. And then coming to next slide. These are the enforcement of TDRC decisions, which are amended in Article 22 of the tax procedure law. So the first one, as we discussed earlier, the decision of disputes issued by the TDRC exceeding AD 100,000 shall be considered as exclusionary instrument if not appealed before the competent court within 40 business days of the notification or outcome of objections, whereby the previous timeline was only 20 business days. So for cases where the disputed amount is more than 100,000, we can go to the appeal court within the 40 business days of getting the notification of the outcome of objections. An additional clause that has been added to this article, that is, in case the parties of dispute are federal or local government entities, then the cabinet shall issue a decision adopting an alternative mechanism of objections and appeal. Until then, the current mechanism shall apply. So in the future, if there's any cases of disputes which are between the federal and local government entities, then they would not be proceeding to a Supreme Court. Rather, they will have a separate cabinet decision and alternative mechanism for objections and appeal. And then, as part of amendment to Article 46 of the tax procedures law, we have seen the formation of a new committee, replacing FTA with the mandate to approve the installments of penalty amount and waiving of refunding penalties in full or in part, pursuant to the controls and procedures of the cabinet decision to be issued according to a suggestion by the minister. So now there will be new committee which will be formed, whereas earlier the FTA was the main authority to decide on the penalties and the refunding of penalties. But now, and there was no installment of penalties which were included in the earlier provisions, which all will be coming under the new committee. And the committee shall be formed by decision issued by the chairman of the board of the FTA and chaired by the chairman of the board of the FTA or his deputy, with the membership of 2 board members. So as we see, these are the few changes that has been in the tax procedures law. And it's more, they have given a wider window for businesses to apply for disputes, and they've introduced different payment schemes for penalties, which will help businesses further. If you have any questions regarding to this, please feel free to let us know.
If anybody has a question, then please, you can use the chat bar or raise your hand so I can see you and allow you to talk on the mic, and so we can take questions. So thank you, Atif. Yes. So if for you to reach out to us, we have our details mentioned here. So at the bottom. So please feel free to get in touch with us if you have any other questions or any advisory related services you require. We'll conclude this webinar here. Thank you so much once again for your participation and coming on to the webinar. We will again be having another webinar just to cover some of the year-end procedures, which all the accountants or the finance team should be doing as part of their year-end process. So keep an eye out for more details on that webinar, and then hope to see you again. Thank you so much once again, and thank you. Take care. Bye-bye.